Have you ever felt like investing is a secret club with a velvet rope? You see these headlines about stocks soaring and people getting rich quick, but when you try to dip your toes in, everything seems complicated. Where do you even start? How much money do you need? Let's talk about Betterment, a popular robo-advisor that's trying to change that. Betterment wants to make investing accessible to everyone, but there's one question that always trips people up. What's the minimum balance to get started? That's what we're here to answer today. But before we dive into the numbers, let's take a step back and understand what Betterment actually is. Robo-advisor revolution, investing for the everyman. Imagine having a financial advisor in your pocket, constantly monitoring the market, making adjustments, and keeping your portfolio on track. That's the basic idea behind robo-advisors. They use complex algorithms to automate the investment process. You answer a few questions about your financial goals and risk tolerance, and the robo-advisor builds a personalized portfolio based on your answers. Betterment is one of the biggest players in the robo-advisor game, and it's known for its user-friendly platform, low fees, and emphasis on automated investing. So, how does Betterment decide what goes into your portfolio? Balancing risk and reward, the magic of asset allocation. When you invest, you're basically putting your money into different asset classes like stocks, bonds, and real estate. Each asset class has its own level of risk and reward. Stocks are generally considered riskier but have the potential for higher returns, while bonds are typically safer but offer lower returns. Betterment takes your risk tolerance into account when building your portfolio. If you're young and just starting out, you might be comfortable with a higher percentage of stocks, aiming for long-term growth. But as you get closer to retirement, your portfolio might shift towards safer assets like bonds to protect your principal. So, how much do I actually need to get started? All right, enough with the background info, let's get down to brass tacks. What's the minimum amount of money I need to invest with Betterment? Here's the good news, Betterment doesn't have a high minimum balance requirement. In fact, you can start investing with Betterment with just $1. That's right, $1. Now, while $1 isn't going to make you a millionaire overnight, it's a fantastic way to get your feet wet in the world of investing. You can start small, learn the ropes, and gradually increase your contributions as you get more comfortable. But is $1 really enough? Here's the catch. While Betterment lets you start with a single dollar, there are a few things to keep in mind. Firstly, with such a small amount, transaction fees might actually eat into your returns. Since investing is a long-term game, it's generally better to start with a larger sum to minimize the impact of fees. Secondly, with only $1, you won't have a very diversified portfolio. Remember, diversification is key to managing risk. The more asset classes you have in your portfolio, the less susceptible you are to the ups and downs of any one market. So, while $1 gets you in the door, it's recommended to start with at least a few $100s to truly benefit from Betterment's features. Beyond the minimum, how much should you invest? The truth is, there's no one-size-fits-all answer to how much you should invest. It depends on your individual circumstances, financial goals, and risk tolerance. Here are some things to consider. Your short-term and long-term goals. Are you saving for a vacation, a down payment on a house, or retirement? Your income and expenses. How much money can you realistically afford to invest each month? Your risk tolerance. How comfortable are you with the possibility of losing money? Once you have a better understanding of your financial situation, you can use Betterment's tools and resources to determine an appropriate investment amount. The takeaway, start small, but think big. Betterment's low minimum balance is a great way for beginners to overcome the initial hurdle of starting to invest. Even a small amount of money can grow significantly over time, especially if you start investing early and let compound interest work its magic. Remember, investing is a marathon, not a sprint. Don't get discouraged by the numbers you see other people throwing around. Focus on building a consistent investing habit and watch your wealth grow over time.